Elon Musk is officially in war mode, and Wall Street is not paying attention. If this was any other stock, Wall Street would be paying a lot more attention. Just, they don't when it comes to Tesla. That is to your benefit. Because let me explain exactly what war mode is. I don't know what people think war mode is, but it's not what war mode is. War mode, from a CEO, quote unquote, war mode, is a CEO trying aggressively, one would say in a warlike manner, to fix the company, to better the company, to change the company. All of those can be applicable. Elon Musk is making it unequivocally clear that number one, he's in war mode to become more profitable, to do whatever it takes to become more profitable. We have seen this in many actions long before Elon Musk really said he was in war mode, changed his X profile picture to have himself in body armor. I spoke about Tesla working to become more profitable. These were more nuanced things that I was seeing, but now it's much more obvious than that. Tesla reducing the average work week for Chinese employees from 6.5 days down to 5 days, getting rid of all inventory discounts on any Tesla models, and just outright raising prices. Not to mention, Tesla just announced they're going to lay off over 10% of their workforce. I don't know how much more obvious Elon or Tesla could be in their war path towards becoming more profitable. I think part of this is because Tesla's stock is down in the dumps. I think the other part of this is there's going to be a lot of investments that Tesla will need to make over the next coming year or two to compete in AI, to bring full self-driving and robotaxis to a reality, and to build out the various factories. The Megapack factory in Shanghai looks to start construction soon. Giga Mexico looks to be starting construction soon. You have India, which is likely going to be announced soon. Those are 3 facilities alone, let alone the expansions on Giga Texas or what's going on in Giga Nevada that Tesla's going to have to invest in, right? These are not small projects. These are whole factories. These are massive endeavors. So I think part of it is to drive more shareholder value. I think the other part of Tesla's war mode focus on profitability here in the last month or two is simply they have to. Or Tesla could be an unprofitable company again if they did not focus on profitability and boosting profitability. Now, here in this video, we're going to talk about what this war mode from Elon Musk really means for Tesla stock and what I'm expecting from Tesla's earnings coming this next week. I don't think we're speculating at this point. I think Elon Musk being in war mode can have different implications as well. Maybe it's not just about profitability. It can be about other things also. But the big one is profitability. And that's clear. Tesla will become more profitable. Now, I will tell you right now, the reason I'm so bullish on Tesla for next week and Tesla's earnings is take a look at what Gary Black said. Gary Black is not a retail investor. He thinks like an institutional investor. And to be quite frank, institutions are wrong on Tesla way more than they're right. Okay, but here's the overall logic. Gary Black says Tesla earnings next week are likely to signal more estimate cuts, reduced full year 2024 volume guidance, and no big change in timing of the $25,000 compact relative to robotaxi. Okay, so some of that could be agreeable. Okay, the whole robotaxi situation. I don't think there's going to be a delay, if you will, to the next gen vehicle. I do think the robotaxi will be coming first in regards to the next gen vehicle, and then you'll get compact, sales of the Model 2 to consumers later down the line. Either way, the Model 2 is going to be coming, but I think the robotaxi is going to be coming first. And I still think that's going to be the second half of 2025, the original guidance that Tesla put out. Now, the most important part I want to point out here is Gary Black says that Tesla earnings next week are likely to signal more estimate cuts. So following Tesla's earnings, analysts are going to cut their estimates further for profitability. I think that is not true. I think Elon, being in war mode, focusing on profitability, is going to force Wall Street to raise EPS estimates. And that is the number one biggest thing that drives a stock in the near term, is EPS estimates going higher. The second thing that drives a stock higher on a fundamental basis is a company coming through with earnings and beating on earnings. I think this couldn't be further from reality. Now, Tesla is probably going to guide to more expenses, more R&D, more investment. They already guided for $10 billion this year. I don't think they're going to change that number too much. So I think immediate profitability will become larger. Now, keep in mind, when Tesla or any company lays off 10% of their workforce, there's severance costs that go along with that, and that's going to be a near-term hit as well. But I think the back half of this year, Tesla is going to become more profitable, and I think a lot of this earnings call is really going to be highlighted around the robotaxi, in which that's not even on anyone's radar. But if Elon and the Tesla team can put it on people's radar, that's going to be great. Now, a day like today, you're probably happy that Tesla's not grouped into the AI stock category, because AI stocks are getting smashed. ARM is down 13%, SMCI down over 20%, AMD down about 5%, and NVIDIA down about 7%. It's a rough day. Tesla down 1% looks like a good day. Yet again, Tesla stock has, been the worst performer in the S&P 500 year to date. So, I mean, Joe Schmo, it doesn't really matter on a day-by-day basis. You've been falling a lot. And that's the other reason why I think you are set up for an upside surprise. None of these things are priced into Tesla's stock. Tesla focusing on profitability should be priced into Tesla stock, as it is obvious. Like, it really doesn't take a genius to figure that out. Tesla laying people off. Tesla reducing hours worked at the Chinese factory. Tesla no longer offering discounts on inventory vehicles. I mean, those are 3 red flags. Green flags, whatever you want to call it, that Tesla is focusing more on profitability. Yet Wall Street can't wrap their mind around that Tesla could become more profitable. Then you have other smaller factors to consider, like a new comp package from Elon Musk that's probably coming. I think we're in for good news as far as the Cybertruck is concerned. I think the scaling process is going well. I wouldn't say better than expected, but I would say it's going well, and Tesla stock is priced for Cybertruck scaling process to be very slow and to be really just unsuccessful. Tesla is priced at $148 for very little good news. And I think you're going to get a lot more good news than Wall Street is currently expecting. And I do think this sets you up for quite the rally following Tesla's earnings. Now, keep in mind, a lot of retail investors have recently sold out and capitulated. I think that's a source of buying pressure. I think hedge funds and institutions that have been essentially forced to reduce exposure because Tesla stock has been falling so much, that's a source of buying pressure. So hedge funds and institutions that are still bullish on Tesla. And why I say they've been forced to reduce exposure, because if you're trying to keep clients and keep your 2% management fee coming in, well, if you're underperforming, that's a problem, okay? If you've been in Tesla, you have been underperforming, okay? So that's a huge problem that big money, they're not going to just sit back and fold their arms. If anything, they've had hedges on Tesla to minimize that burden to their overall net performance. And I do think if Tesla can change the narrative to, hey, we're becoming more profitable. We don't know where deliveries are going to be, but we're becoming more profitable. Next year, we're going to have the launch of the robotaxi network, likely second half of 2025. And then roughly around the same time, if not about 6 months after, we're going to start deliveries of the consumer Model 2. I think that gives markets, hedge funds and institutions specifically, a reason to be bullish on Tesla stock again, for the short term and for the long term. For the short term, Tesla becoming more profitable, that's great. For the longer term, Tesla really putting the robotaxi out there and giving definitive guidance, in which I think they will as far as timing. that gives you something more long-term to focus on. Right now, a lot of Wall Street believes the only source of growth for Tesla is going to be compact sales of the Model 2 to customers. Now, if Tesla can get Wall Street to focus on the robotaxi, that this is actually something that is coming in the not so distant future, then I do believe that is another huge source of profit growth, of EPS growth, coming not so far from now. Now, the third source of buying pressure that we have in Tesla coming after Tesla earnings are the shorts that are in over their head in short positions. You have not a record high short interest, but a couple year record high short interest for Tesla at about 3.9%. You have $16.13 billion currently in short positions with 107.58 million shares that are currently sold short. That's huge. Okay. If just a small fraction of them start to cover, if you get hedge funds and institutions also buying back in, you get retail investors plowing back in, because that's how retail investors operate. They just sell low, buy high. Yes. And that's not a diss to retail. That's just how retail operates. It's emotions, right? You want to be out of a stock when it's going down. You want to be in a stock when it's going up. And, that's just how it works. Okay, I've been there before. That's how it works. I don't make those mistakes now because I realize I want to buy a stock when it's low. When it's high, when it's going up, that's great. I'll trade an option or two if I want some exposure. But that's why I've been buying Tesla so much now. But either way, neither here or there, shorts covering on short positions in Tesla can be a very big driving factor of upside pressure, of volume, of buying activity. And you can see even recently, like today, you had return shares of 1.08 million, borrowed shares of 150,000, meaning you had net borrowed change of negative 931,000 shares. That means 931,000 shares were either covered today or returned from the share out on loan number, which is 27.22 million. And that shows me that some hedge funds and institutions are like, hey, Tesla is, low, right? It's priced for not so great news. If we get any upside surprise, we probably don't want to be short in Tesla. And I think that's part of what you're seeing today and could be a reason why Tesla stock even outperformed, because, some shorts wanted to get out of short positions. Now, obviously, they're called short squeezes for a reason. Shorts usually don't get out of short positions in mass until there is a reason to do so, until the stock starts to rally. And a lot of shorts probably have gains on their short positions. Even if Tesla stock does rally after earnings, they could still exit out of those short positions with a relative gain. Now, I know a lot of people are going to say, why haven't you commented on revenue or EPS estimates for this quarter? And I can tell you what they are, and I will, but it doesn't matter. The markets care about what's coming next, not what happened over the last 3 months. So the key metrics for Tesla's Q1 earnings next week is adjusted EPS of 52 cents. These are Wall Street estimates. You have auto gross margins excluding regulatory credits at 15.9%. versus 18.1% a year ago. Free cash flow of $1.2 billion. Full year 2024 volumes up about 7%. The estimate is currently 1.93 million. You have full year 2024 auto gross margins excluding regulatory credits expected to be about 16.3%. I don't know how much guidance we're going to get on future auto gross margins. I do think Tesla is going to say, hey, we're working to become more profitable, but I don't know where margins are going to go. It's possible Tesla says margins are going to go a lot higher than 16.3%. That would be magical. If Tesla came out and said expect 18, 19% margins by the end of this year, Tesla stock, I would expect at least a 20% rally the day after earnings. Now, full year 2024 adjusted EPS is expected at $2.77. Again, same thing there. If Tesla becomes more profitable, the EPS is going to go higher, and that will force Wall Street to really take their estimates higher as well. And if the estimate is currently $2.77, last year you brought in over $3.40 of EPS. You're not expecting great things. out of really any of these numbers. And I should mention Tesla's revenue is expected to be a little bit over 22 billion, but again, I don't think that matters in the grand scope of what happens with Tesla stock. It's all going to be about margins, profitability, and what Tesla and Elon specifically say about that going ahead into the future. Now, I will tell you on a technical basis, you're holding up a lot of support where I expected, around $147 per share. If you look at the Bollinger Bands like I like to, you can see you're under your lowest end Bollinger Band. So this is basically saying the degree in which Tesla stock is selling off is pretty unprecedented, even for Tesla. And you have recently dropped in just the last 4 days or so from a high of $171 down to $147. Even in Tesla standards, that's a very fast decline. Okay, so over time, you tend to revert back to that middle line, that 20-day moving average. Now, if that were to happen next week based on Tesla's earnings, that would be about a 14% rally from here. I think you could be pushing a 20% rally from these levels after Tesla's earnings. That would put Tesla at about $178 per share, really in the grand scope of things, where you just were 8 days ago, 7 days ago, around April 11th. So, you've fallen so much recently just to get back to the prices that we were just at. Sounds like a large increase, and 20% is a large increase, but you've fallen a lot recently as well. And I think that just furthermore solidifies to me you're going to rally after earnings. Now, I'm not a financial advisor. I'm not a financial planner. I obviously could be wrong, but I sit here and say, what is not priced into Tesla stock? Like, tell you, okay, if Elon said the Model 2 was canceled, like indefinitely, which he already said it's not, that's not priced into Tesla stock. That would cause the stock to fall. If Tesla gives a super long timeline for the robotaxi, like 2027, 2028, that's probably not priced into Tesla stock as well. If Elon and the Tesla team said, yeah, we're going to cut prices again, or we might cut prices again, that's probably not priced into Tesla stock as well. Maybe a little bit, but I don't think most of Wall Street expects, prices to be cut further from here. Maybe a little bit rounded off around the edges, but not large price cuts like we've seen previously. Beyond that, though, it's hard to sit here and say anything else is not priced into Tesla. Bad deliveries, worse profitability, all of that is priced into Tesla stock. Now, I'm not expecting great news on the delivery number front, but you don't need that, okay? Look at what Apple has done. Apple has seen negative growth for 5 quarters, and the stock has done well because they've maintained profitability and even grown margins during that time. So that's what's most important. That is what is going to drive Tesla stock higher, in my personal opinion. And I think Tesla and Elon are going to give us reasons to be optimistic about profitability getting better. And I don't see anyone on Wall Street talking about that as of right now. Now, we do have this broader market sell-off and really this AI stock sell-off, semiconductor stock sell-off, and that could continue to add some negative pressure to Tesla like you are seeing today. And let's be honest, the NASDAQ doesn't look good. This is one of the more aggressive drops that you've ever seen for the NASDAQ, at least in recent times. It's basically just going straight down. And most of the time that doesn't happen, especially not in 2024. I will tell you, though, you're sitting right here at 30.15 on the RSI. So you're getting technically oversold in the RSI. I'm expecting the markets are probably going to bounce around here for a little while. I don't think you're going to continue to sell off at this extreme pace. I think the pace of the sell-off is going to moderate for a period of time. Now, if we're thinking about earnings as the catalyst that sends markets lower, in which I think it will be, if we look at the calendar for next week, Monday's not really going to be much of anything. That could be a bounce for the markets. Tuesday, you have Tesla, you have Netflix, Enphase, Texas Instruments, you have Mattel in after hours. Pre-market, you have GM, UPS, Pepsi, GE. Point is, none of your large mega cap names, even Tesla at this point, if Tesla sold off, it's not going to bring the markets down with it. If Tesla rallies, it could bring the markets up with it, but I wouldn't be confident in that either. Now, Wednesday, you're going to have Meta. Meta will be big, will cause a big sympathy move to the markets. You have IWM or IBM. You have Ford, you have Chipotle, you have ServiceNow, Lam Research. Those names in after hours. Pre-market Wednesday, you have Boeing, AT&T, Humana, General Dynamics, Boston Scientific. Not very important names to the broader markets. And then coming on Thursday, you have your big dogs that report in after hours with Microsoft and Google, as well as Intel, Snap, Roku, T-Mobile, Gilead, so on and so forth. Thursday pre-market, you have Royal Caribbean, American Airlines, Newmont, Altria, Caterpillar, Southwest, and Mobileye. Now, most of this decline that you're seeing in markets, I don't know exactly what it is. I don't know exactly what's happening. It's probably just fear around AI earnings, that things are a little bit too optimistic heading into them. And this drop that you're seeing today is likely pricing that in. ARM down 14%, SMCI down 22%, NVIDIA down 8%, AMD down 5.5%. You're likely pricing in that right now. So I think that could set you up for room, again, for a bounce next week, at least in the beginning of the week, right? Maybe Monday, maybe Tuesday. Wednesday is going to be a bigger test with Meta, and then Thursday is going to be the big test with Microsoft or Google. If they come in with bad earnings, then obviously expect more downside for the broader markets. That's clear. That's obvious. That should be obvious to each and every single one of you guys. But I think you want to be a little bit careful now, considering markets have sold off a lot already and at a very aggressive pace. I mean, including today's 2% plus sell-off in the NASDAQ, you're down almost 8% from your previous all-time highs. That's quite a bit. And again, the RSI being now under 30, typically you get a bounce when you get to this level, right? Typically you do get a bounce. And if we do get a bounce, I'm expecting more downside because I don't think earnings are going to be great. But even back in 2022, like anytime you got to 30 here, you did tend to bounce. Like perfectly, like clockwork, pretty much. And only for brief instances did you actually fall under 30. So that's kind of my outlook going ahead. I think Tesla stock specifically can go back to, the 170s, 180s, 190s pretty easily following their earnings, maybe even higher than that. Okay. Maybe even into the 200s, just depending on what they say. And I think this could set you up for a multi-month rally. I could be wrong, obviously. If the markets do get worse, if the markets, continue to decline, then that's going to be problematic. Okay, definitely going to be problematic for Tesla. And you can see you're falling big time under your 100-day moving average today, and that doesn't look good. Inevitably sets you up for a test of that 200-day moving average. But I think there is going to be a little bit of a pause here, a little bit of sideways trading action for a period of time, a little bit of a bounce as you are now oversold in the RSI, and then you'll continue lower, probably falling back to where you were during the summer of 2023. Nonetheless, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.